This is Banter!
So guys, Bitcoin's on-chain metrics continue to deny any form of a bear market, but at the same time, we've got the dreaded death cross that has just happened. We've got stock markets crashing all around the world. We've got China clamping down on the FUD. So there is a chance that this market is going to carry on going down before it goes up again. What we're going to be looking at today is we're going to be looking at all the FUD, the stock market crashes, the China ban, the death cross, what it means, and we're going to give you guys a plan. Yeah, we've got a massive plan for you guys to show you guys how to survive this and actually any situation. Welcome back, guys. Welcome back. I'm Crypto Man Run, and I'm back in Miami. I'm almost back in Cape Town. I'm back in Miami. I'm bringing you crypto love and crypto wisdom, and today we've got a massive show for you. And as I mentioned to you guys the other day, we have a massive announcement today regarding crypto school and sniper school. Don't miss this announcement because we know how many of you want in on our sniper school, and we had to find a way to get everybody in. So that is exactly what we're going to be talking about today. We're going to be talking about crypto school. We're going to be talking about sniper school. I'm here with my man, Sheldon. Sheldon, how are you, my friend?
I'm good, buddy. Just focusing on the charts, just having a look, see what Bitcoin's doing. But I'm good. I'm good.
We're going to be talking about a lot today. We're going to be sharing some positive vibes. We're going to be looking at the on-chain metrics. We're going to be looking at the charts. We're going to be looking at everything. But the most important part is we actually have a plan for you guys. Like, there is actually a plan. It's not like we want you to carry on trading without a plan. We're going to be talking about the death cross, what it means, and so much more. So if you're new to our channel, Sheldon, we'll bring you back in a second. If you're new to our channel, smash the subscribe button because we come to you very often these days. Because the market's doing crazy things, we need to come to you much more often than normal. So smash the subscribe button. Also, like this video, because if you like this video, it gets more people into the stream. Now, to get this big announcement right, we need as many people in the stream as possible. So smash the like. I see there's about 5,000 people watching, and that's much lower than normal. I'll tell you what's happening. YouTube is now banning crypto content like crazy. The only way to fix it is if you guys smash the like. I see there's about 5,000 people watching, and I see there's only 1,900 likes. If you know, the Coin Bureau channel has been suspended off YouTube, and in my mind, that is one of the best channels out there in crypto. So if you are watching this, smash the like button, smash the subscribe button, share this content with everyone. Help us get this to all the people around the world. Before we start the show, I want to thank you guys. I want to thank you guys, for giving us all the incredible love that you guys give us. But specifically, a bunch of you got together and you helped Freddie, and you guys made a video. It was unprompted. We didn't, as a community, we didn't get involved in this at all. You guys just did it without us asking. And we posted this video, and it so turned out that this video was posted on Father's Day. If you guys didn't watch this, let me show you a little bit of this video. It is incredible.
Fred, you have the biggest family in the entire universe. Be strong, my friend. We love you, Fred!
Hey Fred, we were very shocked with the news, so we just want to send you some love and hope that it makes you smile.
Fred, brother, I'm so sorry about your loss, and be strong.
Buddy, it went on mute there. We are on mute.
There we go. Sorry, I'm back. I'm sorry, the video went on mute. But that was the video that you guys as the community made for Fred without being prompted. And I mean, guys, you sent it to us on Father's Day, which was absolutely insane. It's the most amazing community to be part of. There's just no better community than the crypto banter community. This community really is the most amazing community to be part of. So subscribe, join us, follow me on Twitter, follow Sheldon on Twitter, and let's get on with today's show. Let's get on with today's show. And the first thing I want to talk about in today's show is the open shorts. Remember, we spoke about the open shorts. We spoke about those open shorts, and we said there are really two scenarios here with these open shorts. Either we are going to get the biggest short squeeze ever, because what these short sellers started doing was they started opening shorts at about $35,000. And when that happened, we said to you guys, guys, there's one of two things that's going to happen here. Either there's going to be a massive short sell, or these guys are doing it because they are waiting for a short squeeze, because they're waiting for the implications of the death cross. And we now know that the death cross is upon us. We know the death cross is upon us. Have a look here. The 50-day moving average has crossed over the 200-day moving average, and the death cross was here. And as the death cross happened, and in anticipation of death cross, whatever these short sellers said was going to happen exactly happened. The retail hands got scared of the FUD, and the shorts started to close. These guys opened their shorts at about 35,000 to 42,000 and started closing them at around 34,000 or 35,000. And so the short sellers made huge profits. Why did they make huge profits? Well, because the market was fully predictable. They knew the death cross would happen. The death cross did happen. There was a whole lot of FUD around the death cross, and people started to sell. And we saw Bitcoin go down from 41,000 to 38,000 to 35,000 on news of the stock market going down and on news of this death cross. And now the shorts are closed and the shorts are back in good territory, which means that there's no more short squeeze, that the market is back in equilibrium, and that we're actually going to start another cycle now. So gone is the talk of the short squeeze. There's going to be no more short squeeze. The shorts are out of the market at the moment, and now we're entering probably another phase in this market. Now, what is happening in this market? There's a lot going on, and it's not great for Bitcoin, and it's not great for altcoins, unfortunately. In fact, it's not great for crypto at all. You've got China clamping down on Bitcoin again, and again, it looks like China is absolutely serious this time. It's the same ban that happened in 2017. There's nothing new here. Except now they are really implementing the crypto ban. So what's happened? In the province of Sichuan, they have cut off power to the miners. You're not allowed to mine Bitcoin there anymore. At the same time, the PBOC, the People's Bank of China, orders banks to cut off for funding and accounts to anyone crypto related. Now, this is not new news. In fact, there's nothing new here. This is reiterating a 2017 ban. But everybody knows that even though there was a ban, everybody in China was actually trading in crypto. In fact, China was one of the biggest trading crypto markets in the world. And so the PBOC, which is the People's Bank of China, which is effectively the Chinese central bank, what they did was they went in on an effort and they called in all the banks and they said, look, guys, we're actually being serious this time. And straight afterwards, the big banks, the Alipay, the Chinese Agricultural Bank, which is the biggest bank in the world, all issued statements that they're going to crack down and they're going to stop anything to do with Bitcoin financing. So there is a lot happening in China right now. It's not good short term, but it's amazing long term. Because for a long time, what we've wanted is we've wanted mining to be decentralized, moved completely out of China, and done with more renewable energy, right? And now it's actually happening because the hash power is actually moving to places like the United States. It's moving to places like Texas, where there's green renewable energy. So we're getting the shift from China, and we're getting the shift into much cleaner, much better mining area. Now you ask yourself a question. Why is China all of a sudden, it's why are they all of a sudden clamping down on Bitcoin again? Why now? Why all of a sudden now is China clamping down on Bitcoin again? Well, the answer is super simple. They are having a massive push on the digital yuan. Remember, the digital yuan is the Chinese version of the digital dollar. It's a cryptocurrency. It's a central bank cryptocurrency, what they call a CBDC. Now, China is now strengthening its ambitions in fintech. And what they've launched is they've launched 3,000 ATMs around Beijing, which dispense or get people to buy the digital yuan. So why is China doing this? Why is China all of a sudden clamping down on Bitcoin? Why is it all of a sudden reinforcing bans that were made in 2017? The answer is very simple. They are pushing to win the race for the biggest CBDC, the central bank digital currency, and that is exactly what's going on right here. China is clamping down. China is making sure that Bitcoin is out the way, and that Bitcoin mining is out the way, and that they can roll out the CBDC. So more FUD into the market. Now, there's more FUD in the market. More FUD in the market are that we are now at the mercy of the stock market. And I've said to you guys before, if the stock market's correct, we may have a much bigger issue because it's going to scare investors. They're going to take their bets off all assets because they're going to want to protect their cash. And it's going to take the money out of the crypto market. Now, we saw last week that the stock market corrected by over 5%. That's the American stock market. We woke up this morning. When we woke up this morning, let's have a look at what the Japanese market did. So this was the Japanese stock market, which is called the Nikkei. The Nikkei went down this morning 300 points, or about 3.29%. And so it does seem like there's a much bigger stock market collapse at play here. And I thought because there is a stock market collapse at play here, I'm going to bring in Gareth Soloway because he's a legend. He called the Bitcoin collapse when the Bitcoin collapse happened. And I think he's been talking about the stock market collapse. Gareth, welcome back, my friend.
Hi, Rand. Thanks for having me back.
So first of all, I want you to share your screen because today I want charts and I want you to show me the Dow Jones chart. I want you to show me the US 30 futures. And I want you to tell me where we're at and whether we can expect a stock market correction because it does look pretty scary out there for the stock market. Even though today the futures seem to be pretty okay. I mean, they seem to be pretty stable today. In fact, if the last time I looked, the futures were actually a little bit up. How are you reading the situation? What are you concerned about?
Well, when it comes to the S&P 500, and this is the Spiders chart, which again is a ETF that tracks the S&P 500, we are seeing a little bit of a bounce today. Spiders are up. The S&P's up about 0.9%. The key I'm watching here is this trend line here. And again, we're still below that. So as of Friday's close, we closed down here. We've gotten a little bit of a technical bounce. The reason why this trend line is so important is because it goes back to the lows of 2020, that March, COVID panic low. And if you take that trend line and stretch it through these lows, you get a long-term trend line. So basically the concern for me in terms of why I'm nervous about this market is that we've broken that trend line. Now we haven't confirmed the trend line yet break, but ultimately it gives us that opportunity to signal a major sell-off in the market. In my opinion, we could be going as low as really around 375 on the SPY or even as low as 360, which would be a little bit more than a 10% correction in the near term. So this is a big potential. I mean, this is the first time since March 2020 we have traded below this trend line. You can see they're trying to save it today, but ultimately we're still far below it, and we'll watch to see what happens in the coming days.
So we have had a close below the trend line, right? We've had a close below the trend line. So officially, we've actually broken this trend line. It's the first time we've broken this trend line in about 1.5 years. What does this mean? I mean, does this mean that we are going down? Are we going to have a correction?
So what it does is, so there's nothing guaranteed in the markets, as we know, in any market. But what it does is it increases the odds dramatically that we're on the verge of a big correction. So again, anytime you break a trend line you're going to have the algorithms, the institutions taking note. They're going to be much more eager to continue to unload. And one of the things I talked about recently is that if you looked at the market over the last 2 to 4 weeks, we saw the markets oftentimes here in the US gapping higher, so opening higher. And then for the first hour of trading, there was selling pressure. And then that selling pressure is really institutional distribution or institutional selling. And the reason why it's institutional selling is because the volume in the early portion of the day is heaviest. So that's when the institutions have the ability to unload their bigger positions. So almost every single day over the last 2 to 4 weeks, the markets would open up here and then they would sell for the first hour. Volume then would become very light as we get into lunch hour, and you'd see the markets float back up. And again, that is a signal of distribution from institutions. So anytime the institutions are selling, I want to be very nervous. Now you have this trend line break. The fact that that's coupled with institutional selling, again, makes me very nervous. And I'd probably put a good chance of 80% that we're going to correct here over the next couple of weeks in the US markets.
Okay, so if we have a correction in the US markets, what does this mean for Bitcoin? Because there's one school of thought that says, Bitcoin is the hedge against the US markets. And there's another school of thought that says, when it's risk off, it's risk off.
Right. So this is a good one. This is a great question, because what you have to remember is when panic hits the market. So if we were to see a cataclysmic collapse in the US markets, there's no doubt Bitcoin would sell off in the short term, right? And you saw this in 2020, even with gold, right? So you'd think gold is the safety place where everyone goes when the markets sell off. But during the COVID panic in March, gold actually sold off in the short term before recovering and making new all-time highs. So that would be the situation where if we have a panic sell-off, if people get really scared, everyone just exits everything and kind of says, okay, I'm done for now. I'll reevaluate when the panic is over. If it's a much more gradual sell-off, then I think the Bitcoin trade could still be on in terms of holding up and actually grinding a little bit higher.
So it doesn't feel like a panic sell-off. I mean, we've had the market going down in 1% increments. The first time that I saw any kind of, I don't want to call it panic, was in Japan this morning, where the markets went down 3.3% at the bell. Like as the bell rang, bang, the markets were down 3.3%. And the first thing I did then was look at the US futures. And the US futures were like, well, we don't really care. We corrected on Friday. Do you think that this is going to be a panic? Or do you think this is going to be 1% a day for 5 days, sometimes up, sometimes down, and eventually we're going to look, okay, hold on a second, we down 10%, we've had this correction?
So that is going to depend on the types of news we see in the yield market. So in the bond market, do yields all of a sudden continue this crazy move? Because we know that the Federal Reserve last week, started talking more hawkishly about raising rates, and then rates did the opposite. And I think that's what freaked the markets out a little bit, is you saw the yields collapse actually sharply lower until kind of recovering today a little bit, which is giving the market a little bit more calm. But if yields continue to go wacky and kind of go all over the place, it's going to make the market try to figure out, is there deflation? Is there inflation? Are we going to see a slowdown in the economy? Are we going to see the continued expansion of inflationary pressures? And that's kind of what the market was trying to figure out on Friday with this pretty dramatic drop in the yields. Now, the other thing to remember is that when corrections start off all-time highs, there's still a lot of money that's buying the dip, right? So we always hear about buy the dip in the crypto markets. Same thing within the stock market. If you've bought the dip really over the last 10 to 12 years, you've really made money. I mean, no matter how big of the correction. So in the early stages of a sell-off, you usually see a dip and then some buyers come in, and then another dip and then buyers. It's really towards the end where that panic comes in, where investors have been putting money in every dip, and then the markets just keep going lower and lower. And that's where everyone just throws in the towel, and that panic comes out in form of major, epic sell-offs.
Where do you put cash? If you take money out of the stock market now, where do you put your cash? Because there's so much cash out there, which has been keeping this market high. Where do you put your cash? Gold is out of favor. Bitcoin is out of favor. Where do you put your cash?
I'm definitely a big fan of gold right now. I think the correction last week in gold was a major opportunity to be a buyer. So I definitely am a buyer on gold here after the dip. I also like Bitcoin in the long term. I love Bitcoin in the long term. I just think there's still more of a flush to come. Interestingly enough, you were showing that tweet from Michael Saylor, and I actually am going to be discussing this with Michael Saylor this coming Friday. So that should be a really interesting conversation in regards to kind of what's going on with Bitcoin, with China, and all these other things. But I mean, it's fascinating right now when you look at what's going on with Bitcoin and China. And my thoughts on that, and just touching on this real quick, is that, you have to assume that the Chinese are saying, we want the digital yuan to be the future reserve currency of the world. And the only thing, I mean, everyone knows the US is just diluting and printing, and really there's no way to get out of our debt without continuing to print dollars. So eventually the US dollar won't be the reserve currency of the world. And the Chinese are worried that Bitcoin would be the reserve currency, and they don't want that. They want that digital yuan to be the reserve currency. It goes right along with their Belt and Road kind of thought process about making China the supreme kind of entity in the world. And so that's going to just be such an interesting thing to watch unfold. I think it shows you that Bitcoin's a real threat in terms of a reserve currency for the future. But again, I'm a much shorter term trader. So for me, I'm waiting until it corrects a little bit more to really load up on Bitcoin.
I mean, the China plan is transparent as hell. They're only now ready with a digital yuan. There's a massive on the ground. I spoke to our correspondent in China this morning, and he said, look, everything now in China is about the digital yuan. You can see that the government is obsessed with getting this digital yuan out. One of the things of getting the digital yuan out is saying, get this Bitcoin thing out of our way. We don't want this Bitcoin thing. They are saying that they are worried about money leaving the Chinese economy. Now, there are very strict capital controls in China. And so what they're saying is they don't want to have money leaving China. And so get Bitcoin out of here, get the mining out of here because it's just a distraction. And we want to focus on the digital yuan. And China is basically they're going to take the lead here. They're going to leave the US and all the other countries behind. And that's massive. Now, you said you like Bitcoin, but you also said you don't like Bitcoin now. Bitcoin's had a 50% correction. I mean, now we're really talking at 50% correction territory. Why does Gareth not like Bitcoin now? And I know you are a massive Bitcoin fan. How dare you say that you would get into gold at $1,700? In my mind, gold is the most obsolete garbage asset in the whole world. And you'd put your money into Bitcoin. And you wouldn't put your money into Bitcoin.
Right. And you make some good points. So ultimately I look at gold as a shorter term, safer way to play the dilution in the dollar and the inflationary pressures. So I think that's important, is that, eventually we all know that we're going to be mining asteroids for gold, and there'll be tons of gold out there in 50 or 100 years. In the shorter term, I like it here based on what the Federal Reserve continues to do, and I believe is behind the curve in terms of tightening interest rates. Now, with Bitcoin, you can clearly see this new trend line emerging right here. And this is the concern, because if this trend line gives way, you are going to see Bitcoin come down to basically sub 20,000, just below that 20,000 level, which interestingly enough, Ran, I'm sure you know, that's where it was. That was the high in 2017. So charts have a way of going full symmetry, right? There's a symmetry to charts. It's the beauty of charts. It's why I follow charts. And ultimately, this is the line I'm looking for. If you break below it, then you're going to get a flush. Now, if they can hold it here, if for some reason Bitcoin can really hold, then it can actually gain momentum and go back to the upside. But the concern I have is that you still have a lot of weak-handed money in Bitcoin. Now, there's lots of hodlers out there who are just all in, and they will always be all in, and that's great. I love it. I think 100,000, 500,000 price targets down the line, but you have to wash out those weak hands first. And even though you could say, okay, Bitcoin's down 50% from its highs, I'm not getting the sense that there's panic out there, right? I mean, in 2009, when the markets bottomed and the S&P bottomed, there was literal panic. I mean, people just did not even open their portfolios to look at their holdings. They were just too scared to see how much they were down. You haven't really seen that in the crypto market yet. It kind of reminds me of the beginning stages of the dot-com washout, where a lot of the dot-coms went away. But then you know what survived? Amazon, Google. I mean, the mega players like Bitcoin and Ether that will eventually be the end game for the crypto market. So again, if you're going back to 1999, we'd all invest in Amazon and then look at the returns, or Google. The same thing here is just look for that flush out, get the weak hands out, and then the strong will survive.
If I look at any cycle in the world, and I'm going to use the dot-com bubble. The dot-com bubble had one massive collapse, and that was the 2001 massive collapse. We had the massive collapse. We had the massive collapse. We had the collapse in 2019 of crypto. Are you saying another collapse, another extended bear market before the thing? I mean, it doesn't make sense that an industry would have two adoption curves. I don't think I've ever seen an industry with two adoption curves.
Yeah, so that's a great question, but I think it's important to remember that with the stock market, at least every cycle there's a new flush out, right? So 1999 was a big one. That was the highs, and then 2000, 2001, 2002 we saw the dot-com flush out, and then really you had this big thing building all the way up until 2007, and then you saw the financial crisis and stocks went down 65% or so. So I kind of look at the Bitcoin market as an immature stock market. Meaning that it's very new in relation to what the stock market is, but it still goes through these cycles, these boom and bust cycles. And I think that that's what we're just looking at here. And again, if you have a long-term view, I don't think you have anything to worry about. It might get kind of nasty for a while, or it is nasty already, but don't worry about it. It's more for those of us that are shorter term investors or that want to accumulate more Bitcoin, that I just think you just got to wait for that flush out to really finalize here.
So to summarize, you're not buying Bitcoin now. You are expecting a stock market correction of at least 10%. And if you were to put your money anywhere, you think that you'd rather put your money into gold at $1,700.
Just short term for gold. Eventually, Bitcoin gets to lower levels where I'll rotate a lot of that money into Bitcoin and Ether. Absolutely.
Long term, 3-year view, and I know you don't like to trade 3 years, Bitcoin or gold? At today's level,
if I can buy Bitcoin at my target area around 20,000, Bitcoin. All right. If I had to pay here, probably not.
So if you could, so the question is, if you could buy Bitcoin at $35,000, which is more or less what the price is, $33,000, or gold at $1,750, you cannot touch the trade for 3 years. What are you buying?
That is an amazingly hard question.
No, it's not.
I know it's not for you, not for you. So this is my concern with Bitcoin, right? Is that if you look at the 2017 high, all right, we took basically 2.5 to 3 years to break back above that downsloping trend line that then took us to this 65,000 target. So my concern is that we could be in this kind of what some people call this winter for Bitcoin for a few years, where it's digesting these gains, chopping back and forth before it breaks out. If you told me 5 years on that trade, Bitcoin, no doubt about it. Bitcoin much, much higher, potentially 100,000 in 5 years. For me, the 3-year time horizon is a little murky because of what we saw the time frame for the last correction take.
Let me tell you why it was different.
Okay.
Because if you look at 2001, when we crashed in 2001, it took years and years and years and years to recover. That's the first adoption cycle. The rest of the adoption cycles, if you look at them, are all bumps along the way. The only way that I would see a long 3-year correction for Bitcoin is if the stock market corrects for 3 years. And then, you know what? If the stock market doesn't correct, let's just say the stock market goes back up, where are you going to put your money? You're going to put it in gold? You're going to put it into stocks? The most undervalued trade in the world for me then is a crypto trade. I'm not going to say it's definitely Bitcoin. I'm not going to say what other crypto, but it's definitely a crypto trade.
Mm-hmm. Yeah, so the one thing, just to be clear for everyone out there, is while I think you're going to get a short-term correction in the stock market here, I do think over the next 3+ years you will see a much bigger correction in the stock market. So I would even talk about as much as a 40 to 50% correction in the stock market over the next 3 years. I do think that will happen. Now I think that will bring that Bitcoin trade down to the 20,000-ish area, but I still think it holds that range in the high teens to 20,000, even in that situation, because the money printing, as soon as the stock market collapses, the U.S. economy collapses, and the money printing will kick in again. And then that's going to make the case for Bitcoin longer term even more credible. So again, just keep in mind, I am looking for a bigger market correction over the next 3 years.
Gareth, I can't even tell you how much I love having you on the show. I love this kind of banter and debate. But today, we're out of time. I'm going to get you back again this week because we've got to talk about a bigger stock market correction. It's a big topic. Where's the money going to go? Can they print more money? At what point does the dollar collapse? Naval Ravikant had a tweet this week, and he said, this is the last time that the dollar that we don't have a viable alternative to the dollar. And this is the first time in the world we have a viable alternative to the dollar. So it's the last time that the financial system can crash the money system. We'll get you back this week. We'll talk about all that. Gareth, love your input. Love you, my man. We'll get you. We'll post your Twitter in the comments so that people can see where to go and get your stuff.
Awesome, Rand. Thank you so much for having me. A great conversation, and I look forward to coming back real soon.
Always, my friend, always. I love having this guy. What we try and do here at Banter is bring you everyone's point of view. This is not a shill fest. You've noticed we don't talk about altcoins much anymore because we want to protect you guys. And that's really what today is all about. Today is about protecting you from anything that the market may throw. Now, on the one hand, you've got the FUD. The FUD is, and it's true, the stock markets are crashing. You have got the death cross. The death cross did happen. And so what we want to do is we actually want to prepare you for every situation. The problem is that if you look at crypto or Twitter or all the sources, this is what you see out there. So on the one hand, you got Michael Saylor, who's buying like a lunatic, bought another 13,005 Bitcoin with the $500 million that he raised last week. And he paid $37,617 per Bitcoin, which means that he was one of the biggest buyers out there last week. He was bringing up the price of Bitcoin last week, but now he's finished buying, unless he still wants to buy with the $1 billion that he's raising or has raised from the equity. The problem is that for Bitcoin, the on-chain metrics look amazing. The on-chain metrics today are better than they have ever been. So you've got the price coming down and you've got the on-chain metrics coming up, which is this tug of war between on-chain metrics and macroeconomic factors. And the question is, which one do you believe? Now, in a raging bull market, when the on-chain metrics are good, the price continues to fly. In a bearish market, no matter how good the on-chain metrics are, the sentiment takes a long time to catch up. It can take a month, it can take 3 months, it can take 6 months. And a lot of it depends on what's happening outside of the world of crypto. Outside of the world of crypto, in the stock markets, you've got a potential correction, or you've certainly got some negativity. So what you need here is you need a strategy that can protect you from anything, okay? And that is what today is all about. It's about a strategy that prepares you for anything that may happen. And we're going to look at the whole scenario here. So first, before we do it, guys, smash the like button. I see that we don't even have, what do we have there? 5,000 likes. 4,700 likes and 10,000 people, 11,000 people watching. Guys, smash that like, give us some love. Today, I'm going to share a strategy with you that is going to protect you from anything, guys, from anything. You're going to make money no matter what situation that we're in. But I need likes. I need you guys to get to 6,000 or 7,000 likes. In the meantime, I'm going to bring in my sniper just to say, hey, sniper, how are you, friend?
What's up, buddy? It's getting a little bit cold this side, so I'm just sitting here keeping warm.
Are you ready for anything? Are you like ready for anything?
Of course. It doesn't matter what it throws, there's strategies either way, and the dedicated will survive, the strong will survive, and the weak will get flushed out. It's how the market works.
So guys, what I want you to do is we've got a massive announcement. In fact, we're only making this announcement today if we get 10,000 likes. How's that for a deal, Shaldino?
Deal, buddy. Deal.
Yeah. Okay, let's do it. So I want to prepare the guys for anything. And the reason why I want to prepare the guys for anything is because we've got this tug of war between the on-chain metrics and the off-chain metrics. Sheldon, show me the death cross again.
Here we go, buddy.
Okay, so that's the death cross. The death cross is when the 50-day moving average crosses through the 200-day moving average, and it's typically seen as a negative sign. We're going to talk about whether or not that is a negative sign, and we're going to look at the on-chain metrics. So I'm going to bring you back in a second. In the meantime, guys, smash the likes, break the stream. Come on, break. I see you got 5,500. What do you guys, did you guys fall asleep in the beginning of the show? Was Gareth's voice that hypnotizing? Come on, guys, let's do it. Okay, so tug of war between the on-chain and the off-chain metrics. Let's look at what the on-chain metrics are saying and why they're so positive. So this starts off on a tweet by Willy Woo, and we know that he's one of the best analysts out there. And what you can see is that the hodlers of Bitcoin, he calls them the Rick Astleys, because they're never going to give you up. They are starting to buy Bitcoin again. Look over here. They are starting to accumulate Bitcoin again. They were selling Bitcoin into the strength in the market, but now what are they doing? They're starting to accumulate Bitcoin again. Now, you can see that the sellers, the weak hands are now out of the market. And we're getting a new type of buyer in the market. It's the buyer that's been sitting outside of the Bitcoin market and said, you know what, if the Bitcoin price comes down, I'm going to start buying. And he calls these the shrimp. It's people that have got between 0.1 and 1 Bitcoin. And you can see that the shrimps are actually buying Bitcoin. So more people are getting into the market. Now, when you're in a bear market, that is not when new people come into the market. When sentiment is so low, that is not when people come back into the market. If you think about the 2017, 2018, 2019 correction, not the bull market, but the correction, when there was the bear market, no one was coming into Bitcoin. Today, you've got new people, small people coming into Bitcoin. You've got big people accumulating Bitcoin. Look at the user growth. Look at the user growth on the Bitcoin network. Have a look at that. That yellow line shows the net growth in the last 7 days of the Bitcoin network, which means that from an on-chain metric, you can't argue that the network is growing positively. Let's carry on with the on-chain metrics. Plan B. What does Plan B say? Well, the first thing is he says, Bitcoin is below 30,000, triggered by Elon and whatever else. He says there is also a fundamental reason that we will see weakness in June and possibly July. My worst case is 47,000 in August. So again, my worst case is 47,000 in August, 43,000 in September, 63,000 in October, 98,000 in November, and 135,000 by December. My worst case is that. If that's your worst case, buddy, and that's based on his stock to flow model. Remember, he's the the creator of the stock to flow model in crypto, and this model hasn't been wrong for the last 11 years. Why is he so bullish? Well, he says 60% of the Bitcoin sold in May and June were bought in March and April and sold at a loss. In other words, the weak hand sold. And the distribution of the Bitcoin coins now looks a lot healthier. What he means is that better hands are holding the coins now. Here's where it gets interesting. He prepared us all for the death cross. And according to his analysis, and I've seen many of these, what happens when there's a death cross? And this is quite important. I've seen some charts that say that when there was a death cross, and it took the last 5 times that there was a death cross, 30 days later, the price of Bitcoin went up, down, up, down, up. 90 days later, the price went up, down, up. And basically, what you can see here is that there's not really a pattern if you look at what happens when there's a death cross. Why is there no pattern? Well, one, because the death cross is what you call a lagging indicator. The death cross is actually showing us what happened in the last 200 days or the last 50 days. What the death cross isn't telling us is what's going to happen going forward. The death cross reads the sentiment in the last 200 days and in the last 50 days. And it kind of says that when the 50-day moving average, when the sentiment in the last 50 days is worse than it was in the last 200 days, that is something to watch out for. There are many schools of thought. There's many pieces of data. Some schools of thought say that every time there's a death cross, the market has gone down. Others say the market has recovered. Others say it depends whether the death cross crossed when the market was bullish or bearish. And I'd argue that right now the market is bearish. The best thread that I read about this was a thread from a guy called Rect Capital, or an account called Rect Capital. And I'm going to fly through it. It says, Bitcoin is on the cusp of the potential death cross. Whenever the death cross occurs, BTC experiences deeper downside. How likely is it the death cross occurs? The death cross has already happened. I've explained to you what it is. And I've explained to you, so what he says here, notice how it takes let me read it, let me show you the screen. He says, notice how it takes a significant amount of time to actually perform a bearish death cross. It takes a long time. It took 4 months for the death cross to occur. Here, in this case, it took about 3 months from the time that the market started to going down, which means that there is some lag. But now let's look at previous death crosses. In sum, when Bitcoin peaked in 2013, Bitcoin dropped 73% in 135 days until the death cross actually happened, right? So first Bitcoin started dropping, then it dropped 73%, and then it dropped an additional 71% in the months that followed the death cross. Let's look at the next death cross, which was in 2017. It took 3 months for Bitcoin to drop 70% from the $20,000 peak. It dropped 70%, but once the death cross happened, Bitcoin experienced an additional 65% drop. When Bitcoin peaked in 2017, it went minus 70% in 107 days until the death cross happened, and a further 65% after the death cross happened. Okay, now let's look at another historical one. In 2019, when Bitcoin peaked in June 2019, it took 149 days for the death cross to occur. It took 5 months to perform the death cross. And once the death cross already happened, Bitcoin went 53%, went down a further 53%. Why am I showing you this? I'm showing you this because it's all a function of what your timeline is of the market. Depending on how you look at the data, you will analyze it differently. Sometimes when the death cross happens, it's enough time has passed for it to pass. Other times, when the death cross happens, it takes a long time for it to play out. That's the bottom line here. The death cross is effectively a lagging indicator, and we need to look at everything else. And right now, we're looking at two things. We're looking at the death cross, the technicals, and then we're looking at the on-chain metrics. And at the same time, we have this noise of the stock market. In fact, it's the most important thing. The noise that's happening right now in the stock market is actually the most important thing that's happening right now. And there's a massive tug of war. So the question is, as a trader, how do you make money out of this? And that's when I want to bring in my sniper. Sniper, how are you, my man?
I'm good, buddy. I'm good.
So we said we'd make a big announcement on Sniper School today. And I think probably now is a good time to actually talk about the big Sniper School announcement. So here's the problem that we have. The problem that we have is we want to get everybody into Sniper School. We want to get everybody trained. We want to give everybody free education. Right, Sheldon?
100%, buddy. 100%.
But we can't help everyone, right? Like, because we want to keep it personal. We want to make sure that we know everybody that attends Sniper School, that we can help you guys one-on-one, right?
Exactly.
And the problem is we can't do that. So what do we do, brother? What do we do?
I think we got the plan. It may roll out a little bit longer, but we got the plan. I think, that's the thing, is we're at such an important stage, or while these markets are sitting like this, we got to get this education out, Ran. You know what I mean? We got to get it out, because these times happen, but we need everyone educated when the bull cycle starts again. And I think that's why between us, we really want to bring this.
Okay, so what we're going to do is as follows. First of all, we are going to increase the size of the Sniper School classes from 20 a week to 50 a week. And then we're going to increase them to 100 a week, which means that 100 of you who are here, who are subscribers, you have to be a subscriber. You have to follow me on Twitter. You have to follow Sheldon on Twitter. You have to follow Crypto Banter and Fred on Twitter. Then we are going to do a Guinness Book of Records. We're going to try get 50,000 people in one class, and we're going to do the biggest crypto class ever done. But on top of this, because we know the markets are slow now, and because we don't actually want you guys trading, we don't want you guys trading right now. We don't want you guys in and out until the market finds direction. We're going to use that time every single day to bring you Sniper School lessons, Sniper's wisdoms, Run's wisdoms. Together, we're going to bring you every element that is in Sniper School. We are going to bring you live on the shows every single day. Every single day, it's going to be 2 classes. One in the morning show or the early show, depending on where you are, and one in the afternoon show. So, and these lessons are designed to take anybody who's watching the stream, and over 100,000 people watch the stream every single day. You're all going to be in Sniper School. We're going to teach you the same lessons. It's just not going to be in the same personal environment where we can actually see you on the Zoom call, but every single day, we are going to teach you guys how to become better investors and better traders. And we are still going to pick people to join us in the 100 people person class, but we're going to actually give you the education now. We're going to use this bearish market to prepare you guys for the next market and to make sure that you guys survive. What do you think, Sheldino?
Awesome, buddy. Awesome. And it may not be done perfectly in your time, but guys, it's information every day. And what's nice is we're going to do topics over a few days every single day. So it also, for the people that are busy and have jobs on that, it's not going to be overload every day and this whole massive course that's going to hit you in 1 week. We're going to do it, but every day is going to be a key topic on both shows, obviously. And I think this is the best way around. It's the best time to do it. You know what I mean? The market makes you want to quit, and this is the time for us to really educate you on what we're investing in here and to prep the skills for now. And I'm excited, buddy. I'm very excited.
So I see we've got 6,500 likes. Let us know if you like that. If you like that, let's see how many we get in more in Sniper School. And then I think, Sheldon, what do you say we start off with a couple of lessons right now, like today? Let's do it now. Let's not waste time. Let's wait until tomorrow.
Let's do it.
What do you guys say? Should we start now? Should we start with like some lessons right now? Get into it, show you guys what it's about? I think it's a good idea. What do you think, Sheldon?
Let's do it, buddy. Let's do it.
Tell us in the comments. Tell us in the comments. Tell us in the likes. Oh, okay. Coinbearer got unbanned. Great. Guys, you have to share this because otherwise, I mean, YouTube has gone like the Chinese government, basically. They are like the Chinese government. They have lost their fucking marbles, okay? Yeah. Okay. Let's talk about something that's super important. And for me, the most important thing about, the most important lesson I've ever learned in trading. And I actually learned it now again. No matter how many times I learned something, I learned it again. And that lesson is having patience, not FOMOing into trades, having real patience, having the ability to zoom out. And I want to show you guys what I mean by patience. Patience is waiting for entry points. Patience is letting your winning trades run for a long period of time. Patience is holding on for long enough to let the markets recover and then also to wait for the exit points. And I want to talk to you guys about how I see this. Remember a few weeks ago, I tried to get into Solana, and Sheldon told me that my entry point was actually going to be at $32. And I said to him, Sheldon, you're smoking. There's no way. It was the price was $45. Sheldon told me that my entry point was $32 or $36. I said to him, Sheldon, it's not going there. What did I do? I FOMO'd in because I wasn't patient. We knew the market had to recover. And what I should have done was I should have waited, right? But I wasn't patient. I wasn't patient. And as a result, I paid $45 for my Solana, and Solana did hit 32 and 33 and $36. So I didn't have the patience to hold on. Let me give you guys another example. In the previous bear market, I bought 4 coins: Bitcoin, Ethereum, Arweave, and Luna. And the bear market forced me to be patient. I couldn't sell them. So the bear market forced me to be patient. It forced me to hold it, to hold those tokens. I held them for 2 years, 3 years. But every single one of those tokens has done over 100x. I was forced to be patient. Now, all too often, we chase those deals because we get FOMO, like I did with the Solana trade, where the key is just having patience. Let me give you another example. Wait for your market entries and wait for your market exits. You need patience. Stop jumping in and out of trades, because when you do, you don't make money. Sheldon, what do you think, man?
Yeah, buddy. I think the only time that you should be, if you are trading very, very active and you're trading very short time frames, it's with school fees money, and it's just you learning. You know what I mean? I traded a lot in the beginning for me to learn the skills. And once I got the skills, I actually started moving a bit away from the day trading and became an investor. So I think for a newbie coming in, trading a lot of the market and learning this stuff is cool, as long as you just understand that you're paying for that education. So every lesson you're gonna learn, you're gonna lose some money, and that's one thing out of Ched's book, which is very, very powerful. That if you've lost money in a trade, you've just paid for a lesson, and it's your choice if you're gonna repeat that lesson again, where you've just paid for your lesson. Same as school, same as anything. We pay for these things. So if you are trading the shorter term, make sure it's play money. You know what I mean? Make sure it's money that you are not risking too often. And that's exactly where that spot wallet tool comes into play. It's an active trading thing, and it's got a rule system behind it. You have to have the rules behind it. You have to have the goals behind it and understand what that wallet's there for. And we could see, especially when the market now, the best way we do know is obviously getting the right entry as an investing entry and holding and getting it right. You know what I mean? And like you said, the bear market had to teach you that. And this is what I'm trying to explain now, that yes, Bitcoin is down and we can see the short-term trades are just not right. It's not a short-term trading sort of market. But we are still at the point where we must understand that we are buying it at 40, 50% down, where a lot of people have been brought into the markets when buying at 40, 50, 100, 200% up. And it may seem like it's quite not an important rule now, but it's massively underestimated that we're actually buying at a different time than what we've all been taught to buy previously, where we all hear about it and our friends telling us about it. And now we're buying them on specials. And yes, the specials may become a little bit bigger, but for the first time, we're actually buying specials and we're not buying the pump. So I think it's a very important lesson.
And you got to hold. This is a market where you got to buy and you got to hold. You don't know when it's going to turn, but you do know that it's going to turn. So this is your opportunity to pick up those gems that you think are going to be here in a year or 2 years or 3 years. And I think I'm going to I think that sets me up for the next thing. And I want to talk about this much more tomorrow. But it's about what I call the TTT rule. And that is, when do you take a trade? Okay, when do you take a trade? So for me, when I take a trade is when the fundamentals work, when the technicals work. And the third question is, will it survive a bear market? We'll talk about the take the trade tomorrow, but the biggest question you want to be asking yourself now before you buy a token is, if we get into a 1 year, a 2 year, or a 3 year bear market, will your token survive? What do we mean? Ethereum, Bitcoin, Luna, Arweave, all those, Thorchain, those protocols are working, they're decentralized, and a lot of people are building on them. But these new projects that raised a small amount of money and didn't get the network effect, the question is, are they going to be here in 2 years if we get into a 2 year bear market? If you think that the token is not going to be here in 2 years, trade out of it right now and put the money into a trade that is going to be here. Now, you may say to yourself, how the hell would I do that? It's down 90%. I can't sell it at 90%. Yes, but the whole market is down. And so you may be able to get the other token cheaper too. What we're saying to you guys right now, switch from the ones that won't survive a bear market, that don't have enough money, that don't have strong enough teams, and don't have enough network effect, and put the money into the ones that will survive a bear market. Because we don't know how long this is going to last. Could be another month. I hope it's another week. I hope it's another month. But maybe not. And then what? And then they're all going to go to zero. So now is the time. It's the best time to trade out of the small ones into the stronger ones was yesterday. The next best time is right now. What do you think of that, Sheldon?
No, brilliant, buddy. It's so important, and that's a big thing that I've learned as well. The problem with TA is you sort of ignore the fundamentals, and we sort of trade emotionless. But learning that obviously is, will it survive a bear market? One of the biggest things I've ever learned since joining you and since working with you. But it's such an important thing to do. And remember, I say it again, guys. No one listens and no one learns in a bull market, but everyone wants to learn now in a bear market when everything's gone south. So this is the time for us to increase our knowledge, because you don't really care in a bull market. And another thing I want to add is last year it took me about 9 months to learn the skill and to actually get somewhere. And I made money in 3 months of that full year, meaning that we work for 9 months to receive 3 months of reward. And that's it's a really true statement that yes, your studying time is a lot longer, but that money comes, and when the markets turn and it increases so much in a short period of time, that's what we're actually practicing for. This is why we dedicated every single day for that one shot for the next 6 months where it goes absolutely berserk. And then we can just hold those investments. We got all our entries at the bottom, and we can literally enjoy the ride for the next few years. That's what we're actually fighting for, is that one entry on each of these great coins that we never have to sell again. I don't know what you think about that.
Amazing. I mean, I bought 50 shitcoins in 2017. I lost money on 48 of them. But Arweave and Luna gave me 150x each. And that's, again, patience. If I'd sold them, if I got the itchy fingers to sell, I would have lost all my money. And that's exactly the strategy is here. The strategy is you've got to have patience. You've got to have patience. Sheldino, let's leave it at that, because we've got a sniper school starting now. Tomorrow we'll be back, 2 shows tomorrow with knowledge and lots of knowledge. I mean, just to give a taste of what's happening here tomorrow.
There we go. Yeah, psychology of trading, guys. We're going to work on the header bit this week. We still have the other 2 wallets we're still going to be going through this week, the cash wallet, the long-term wallet. We're going to be giving you guys rules. We're going to be giving you guys goals, the purposes for those wallets. Why are they there? How do we use those things? As well as obviously psychology of trading. It's important to get the mindsets right this week, very, very, especially through this weekend.
Amazing. All right, so Sheldon, we'll see you again tomorrow, 6 a.m. EST. 6 a.m. EST. Early. Cool, my brother. Thank you. Guys, love you madly. See you guys again tomorrow, 6 a.m. EST, then again, 10 a.m. EST. Until then, if you are trading, trade well.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.